From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Hello, this is the COB, all the stuff you need to know about the day in business and markets. I'm Kyle Rodder here with Tessa Arcilia. Tessa,
yeah, filling in for our colleagues today. Good to be with Kyle.
I know, it's great to have you here as well. I face it, obviously all the AusBiz viewers will get to know much better with time, but we may as well crack in to the day that was because, well, it wasn't exactly very exciting. We joked with Andrew Gagan earlier about trying to find a pulse in this market. Not much there really.
No, exactly. So we're looking at barely any movement, and I think we were expecting that, Kyle. The last 4 days, it's been really quite lackluster. We were talking about that word lackluster. And let's check on the ASX at the moment. It is, I think, at up just 6 points, 7,371, up 0.8%. Do you think, we have this wait and see attitude because no one really knows where the indicators are heading, I think?
Yeah, there is definitely a level of uncertainty there, and I think one thing that's really shone through over the last few days is this complacency, perhaps, or the word complacency has come up quite a lot.
Yeah, we were talking about that this morning because we talked about the VIX, and looking at the volatility. Why is the volatility quite calm and flat? Is it because markets have decided, look, we don't know where to go at the moment. Maybe this is that moment of calm, or have they already priced that in? Have they already expected it? Why is that?
I know. Well, we may be even just in the eye of the storm. It's very difficult to tell, but it's a good way to get ourselves into our three themes today because we do touch on that just a little bit. A complacent lull, I guess that's my phrasing of it, because it just doesn't seem to be the case that inflation is solved yet. We still have earnings coming up in the United States that could potentially rock the boat, some might say. And then even locally, there's some bank earnings coming up in the next few weeks, which could cause some ructions. RBA rate hikes are still on the table.
Would that be the catalyst to have that movement? Because I also think that maybe the investors are just so underweight and are shorting equities that there's not much to do at the moment.
Yeah.
Maybe if they're bored, as you said yesterday, maybe if they're bored, they'll do something. But at the moment, there's just nothing much they can do.
Yeah, I have to attribute that one to Mark Gardner. The Bulls, the Bears, and the board at the moment, and that's a cracker. Yeah, got to love the alliteration there with three Bs. But let's move on from that complacent lull because we managed to draw a lot of blood from that stone because that's what it's been like in the markets today. But we have had some interesting news as far as the organisational makeup of the RBA. A bit of a shake-up.
Yeah, that was a big story today as far as the news cycle goes. But did it move the market needle? Not so much. And I think I was looking at some reactions that we saw today. Broadly speaking, they're looking at how many times, for example, will the RBA have their meetings? Because that will make investors determine where are the key risk areas that they have to look out for. But as far as influence on inflationary targets, 2 to 3%, I think they're sticking with that. I think they've made that very clear, possibly not to shake the market too much because this is pretty big news, on the news front.
Yeah, it's almost an organisational shake-up, isn't it? It doesn't say anything necessarily about macroeconomic policy, but it's sort of how things are done, not what gets done necessarily. And, well, I think that's a really good point that you make. It's kind of a change of the cadence, isn't it?
Yeah.
Rather than 11 times a year, it'll be 8. And I guess it'll just mean those meetings that do happen will be just that little bit more important than the ones that, well, we're used to.
What are your thoughts on that? Because we're saying that this dual board is a bit like the Bank of England. And I heard this morning someone saying, well, look what good that did them. Like, what do you think about this structure?
It's one that I'm finding really difficult to get my head around, I suppose, because, this is something that is very intricate, and every central bank has its own little makeup and has its own unique features that can affect policy, at least at the margins. They have inflation targets, they have employment targets, but the way that they come to these decisions, as we've seen today, can be very different. So, the kind of commentary that I've been able to glean from the guests today is that this kind of just modernises the bank a little bit, brings us in line with the rest of the world, that perhaps we were behind. Maybe the Bank of England model isn't the best way, but the RBA model was certainly not fitting of an advanced a central bank. So this will hopefully give us a little bit of a revamp.
I saw a headline that said Australia walking to the 21st century. Is that pretty much?
That's fantastic. Yeah. It's the year 2000. Well, get me my cargo pants and I don't know what those are. They have a rather crude, colloquial name, those glasses that they used to wear back then. But I don't know, maybe I can crack on those as well with the cargo pants and make my way into the year 2000 with the RBA.
Kyle, start the trend.
That could be it. But let's get across some of the areas of the market that we're moving and shaking today as well. Metals and mining, down today. Tesla, I don't know if there was any news necessarily, but certainly away from the market.
I think we were talking about inflationary pressures that do you think that could be working its way into the mining sector, or possibly profit taking from some of the gains that they've had this week? I mean, they were the movers this week and pretty much just the only ones.
Yeah, no, exactly. And I think, when you look at the gold miners as well, you've got Newcrest on your screen there, but we'll flip over the page as we've just done there. And you can see that we actually had that inflation surprise in the UK last night. The inflation data in the New Zealand, I have to say, today was a little bit softer than expected. So we can share that, wins when they come. But there was that sense that maybe in Europe and the UK, rates will have to remain higher for longer is the phrase. That hurt gold, maybe had a bit of an impact on our miners as well. And an area of the market that probably benefited from that dynamic, higher interest rates, perhaps the banks, and really was the linchpin of the markets. Very modest gain today.
Yeah, very much so. And do you think they've priced in that, expected 25 basis points raise from the Feds, or is that something we are bound to see the next few days?
Yeah, I think that 25 in May for the Fed seems to be basically in the price. But I mean, locally, it will certainly be about how the RBA goes when it meets in, effectively 2 weeks' time.
And we have CPI numbers as well.
And we have that CPI number first. And I think everyone is sort of waiting for that to get a better sense as to whether this is an extended pause or whether it was really just a 30-day pause, which is really not much of a pause at all. But
exactly.
Anyway, let's get to the stock of the day, because of course before the bell we had Tesla reporting, and Danny, a fan of Tesla, thought that maybe car sales could be the appropriate pick. I don't know. Have you followed car sales?
I've seen the website and I've looked through it.
Well, Tesla spent a lot of time, a very cosmopolitan person overseas, so
just looking.
Still to learn about our sort of cultural treasures like car sales.
Yeah. No, it's very interesting. I just read that it's the biggest car website ad, where you buy and sell your cars here. So something, very interesting for me to see. And let's see how it did today. Yeah,
absolutely.
Positive aspects, negative aspects.
So kind of a hold?
I have to say I'm sitting on the fence with this. Yeah, it's a hold. Unless we get a break above 23, then you might have some of that short-term momentum. But from where I'm sitting at the moment, I think it's just a hold.
Look, I'm not going out and buying it at the moment. We already had sort of bond yields come back from where they are at the moment. That's sort of any tech exposure has done really well off the back of that. So we've already had a recent rally. Not going out and buying it straight away. Happy to hold. It's going to be a really good company. It'll stay stable in your portfolio. Accumulated if you get a market pullback or the share price pulls off from here.
Okay, so that was Michael Gable from Fairmont Equities, Brodie Harold from Macro Capital, and basically a double hold there. So nothing emphatic, but certainly seeing some value in the stock.
Yeah, so interesting to be watching that. I just wanted to point quickly on Tesla, because you mentioned it before that. It's been starting this price war. Do you think that's going to be working its way into the EV market? We talked about Australia's national policy yesterday, the first one they came up with. Whether or not you agree with it is a different point, but it might give investors a signal on where to put their money. Should we be looking into more opportunities in the EV market with a price war now? It's going to make it more affordable.
It's really a good point that I think Danny actually made in her view today, and I obviously always recommend Danny's writing, especially this one. She loves Tesla, is really across the details. And she kind of spoke about how the fact that a lot of automakers actually don't make much money off the vehicles, but it's the servicing and parts down the line where they generate a lot of their revenues. And what Elon Musk was saying on the earnings call is that, we're in this sort of price war at the moment, but our margins are still 19%. Right. So we're looking to make money on the vehicle. The servicing down the line is basically nil because all you need is software upgrades. So, we're trying to undercut our competition here. We still have the better product. We still have a product for investors that is attractive because we're making money off the actual cars. And it's a good time to buy into Tesla stock. Obviously, that was his selling point, Elon Musk. But I thought it was a really interesting point, and perhaps a little bit of a reason to be perhaps discerning when it comes to the EV space, because it's highly competitive and it's highly costly. And if some of these, disruptors in the space to what is effectively Tesla's pie. So to mix my metaphors there, they don't make any margin off their existing vehicles, let alone these expensive electric vehicles. So just a few things to consider there when you're trying to find an opportunity potentially in this booming EV opportunity.
To look out for that. All right, so I think we can move on to our guest today.
Absolutely, and so as you so often is on a Thursday at the moment, Henry Jennings from Marcus Today joins us now. Henry, thank you so much for your company this afternoon. I thought I'd have to ask the question because I feel like it will be in the category of commercial property, but the RBA review, meant anything for you?
Hi, Kyle. Hi, Tessa. Nice to be on the show with you. The RBA review, well, I guess, we are playing a bit of catch up. The world has moved on from a bunch of business people sitting around a table every month, having a few bickies and coffees after lunch and deciding on the interest rate policies. I guess what is interesting is if we have less frequent meetings, there could be a tendency for, instead of the creepy quarter points a month, to go the more dramatic moves being spaced out further apart. So you may see we get sort of 2 or 3 months of nothing and then suddenly a half or 3/4 point rise or even 3/4 point cut or whatever down the track. So that does mean that we may get lumpier and bigger moves from the RBA, but I think it's just bringing it into the modern day. And let's face it, their calls, I know that you had a very eminent guest on earlier talking about how it was impossible to make those sort of calls. Yes, I think the answer is it is impossible sometimes to make the big macro calls, especially when you've got COVID, which was a once in 100-year event, literally. But what is, I think, what was really bad that Phil Lowe did was, having made the call, was then to basically back it up with the we're not going to be raising rates till 2024, and out you go, guys, borrow as much as you can, go hell for leather, and really get those debt levels up, which has really come home to bite literally a lot of people. So I think that has been the most significant thing that the RBA stuffed up, apart from the transitory inflation, which was clearly not transitory, as we're all seeing that in our own lives. Anecdotally, I'm sure these guys don't get out of Martin Place very often, except to get someone to buy them a sandwich. So, I think that they sometimes get a little bit divorced from reality, what's going on in the world. Maybe this will help. It's certainly, it's certainly a step in the right direction to modernise. I would be very surprised if Phil Lowe was given the top gig again come September or in the middle of the year when Jim Chalmers is talking about that. I would think a very easy gig would be for him to go to a big investment bank and sit back and relax.
All right, looking at the inflationary pressures that you were talking about there, it's not transitory as we've seen. It's so stubborn, and a few weeks ago, it's almost feeling like people are getting inflation fatigue, but then it's back on the table. Do you think that the performance we saw today, for example, or that the jitters that we're feeling in the market it means that inflation is a much bigger story than we're making out to be at the moment?
I would like to have some jitters in the market, to be honest, Tessa. This has turned from a bull market into a boar market. We were down 3 points today. We traded in a 30-point trading range. We've got risks lining up like soldiers waiting to ambush us. And you've got the VIX at 16 and a bit, its lowest level in 18 months. 3 points today. I mean, really, that does belie the fact that we have seen some big moves in BHP production numbers tomorrow, 2.5% down in BHP, and the bank's pushing higher. That's an easy one, given that we've got results coming up at the beginning of May for 3 of the banks. But I think, and something I'm going to be writing about tomorrow in our newsletter is talking about how many companies have used inflation as camouflage for raising the prices. Let's face it, they had a pretty tough 3 years in some cases. A pretty uncertain 3 years, and everyone talks about inflation and they look around and go, oh, we're seeing a bit of inflation, let's whack our prices up and see how far we can push them before the consumer hurts or the consumer pushes back. We've seen shrinkflation as well for many products where the sizes just get smaller. So I think there's a bit of that going on. It'd be interesting to see as the US and European results play out, because we sometimes forget about European results. But it'd be interesting to see what the margins are doing, whether we're seeing margin compression, i.e. the inflation inputs are hurting and squeezing those margins, or whether we're going to see margin expansion. As I say, some of these companies have used the camouflage, the ghillie suit of inflation to actually raise prices and push margins higher after years of not doing so. So it's going to be interesting. But I would like to see some volatility, to be honest, Tessa. I'd like to see some decent moves in the index. And the US is pretty quiet. Europe is opening extremely quiet, and we were 3 points down. It's the bull market.
Yeah, we were looking at this week thinking that it was going to be exciting with all the US earnings coming out, but it was pretty muted. So take out your crystal ball, Henry, for a second, and where would that catalyst be coming from, do you think?
Oh, the catalyst for a move in the market. I think we've all got too complacent. I think Carl's right. I think we've all got fat and happy at Easter. We're all stuffed full of Easter eggs. We're on school holidays at the moment. A lot of people are away as well. We've got a holiday on Tuesday. I don't really consider Anzac Day a holiday. It's a day of commemoration, but we do get the day off to commemorate on Tuesday. So a lot of people will be taking the long weekend, take the Monday off the long weekend. So, as we drift into that on the back of Easter, I can't see too much really excitement happening in Australia, to be quite honest. Unless something dramatic happens in the US, I'm struggling to see where it's coming from. Of course, at the end of this month, coming into May, we've got another RBA meeting. We've got the federal budget. We've got the US the Federal Reserve meeting as well. So we could see a bit more volatility in May. But if you were sitting on options, calls or puts, hedging at the moment, having that insurance policy, you would be scratching your head with the VIX at 16, thinking, why have I got this insurance? But as we all know, you should buy insurance when times are good, when your house isn't on fire, because by the time your house is on fire, the insurance premiums are going to be quite high.
Indeed. Might dovetail into the Bank of Queensland, because it released its half-year results. It kind of, I guess, is a presage to some of the other banks that will report out of cycle, of course, in the next few weeks. What did you make of that? Because clearly there were some one-off items that affected profitability, but I did speak to Patrick Allaway earlier today, fortunately enough, and he seemed to be sort of painting a fairly gloomy outlook for the economy as well as business conditions for the bank. I mean, did you make anything of the results yourself?
Not really. The results were pretty much in the market, because we did see them last week, to be honest. We did see all those numbers come out last week. This is really just confirmation of the dividend, the write-downs, the profit. I think when you've got such a competitive market out there at the moment with all these cashback offers on mortgages, the refinancing, the cliff coming, etc., you can understand why Bank of Queensland is struggling a little bit, I have to say. When the big boys fight, the little boys get crushed. And at the moment, you look at the Bank of Queensland share price, it is not performing in line with the other banks. Certainly, the other banks have been perking up and had a good day today. You've seen Commonwealth Bank rally from sort of $92 to $100, whereas Bank of Queensland has been going in a one-way traffic. So I think, the problem for regional banks, and we saw this in the US, is that when people get a little bit spooked about the banks and the media, and we are to blame for this sometimes, because we can do some spooking of our own, talking about regional banks and banking crises and all that sort of stuff, people naturally tend to head towards safety and the bigger banks. And I think that is certainly playing out at the moment. I think the big four and Macquarie in the 5, coming up in the 5th position, will be getting business off the likes of Bank of Queensland. So certainly from where he's sitting, it may be a very different kind of market to where other banking chiefs are sitting, which are doing far better.
Henry, just very quickly, I want to touch on oil, because just a few minutes ago I saw that China's refineries processed more crude than ever before in March, and despite this, they were still increasing their inventories. What is that going to do to the oil market? Even if OPEC is able to keep the prices at $80 per barrel at that level, would China be stocking up so that they don't have to buy when prices are high? So what does that do to the oil market?
Geez, Tessa, that's another commercial property kind of question, isn't it? Chinese inventory stockpiles on oil. Well, I think we all know that at the moment oil is a bit of a political game. We've seen the Saudis, etc., cut production. We've seen a lot of love between Russia, the Saudis, and China, and that is certainly an axis of intent. I guess I was going to say evil, but it's intent certainly that the world is bifurcating to some extent, and they do have a lot of power. I think ultimately we're going to see higher oil prices, which unfortunately is going to drive inflation. We've still got the US, which ran down its strategic petroleum reserves massively when the oil price was high, and it has yet to buy back those strategic reserves. So I think that's come into play as well. And clearly the Saudis don't want oil to fall too far, and they're very happy to see it drift higher, and I think that will continue to be the case, and we will see higher oil prices this year. I don't know if we'll get to 100, but I think 85, 90 is probably the equilibrium price given the global growth constraints that we're seeing. But China reopening is going to help the oil price, and the fact that we do have the axis of intent with those three working in tandem. And of course you've got India now coming into the game. So I think the pressure is on oil upwards rather than downwards.
Got to throw one curly one in there at least. Henry, thank you so much for your patience and insight as always. Henry Jennings from Marcus Today.
Thank you.
Thanks guys. I'd expect nothing less.
Thanks, mate. Okay, well, let's take a look at what's overnight, shall we? Because we've got a fair bit of data around. Nothing sort of, I guess, too high impact in terms of, maybe being that catalyst. You never know, but still plenty of information there that we sort of can use to build a bit of a picture on what's going on.
Tomorrow, So U.S. initial jobless claims overnight, existing home sales, ECB minutes, as Henry was saying, we can pay more attention to Europe as well, just to maybe get some signals from there. Eurozone consumer confidence, and U.S. Treasury Secretary Janet Yellen is going to be speaking about U.S.-China relations, and some comments on China might be of interest, tomorrow. For us, and also we have tomorrow we're looking at UK retail sales and quarterly productions. Are you looking forward to any of that? To BHP, Whitehaven Coal, WDS?
Yeah, without a doubt. I think it's certainly something that market participants are going to be keeping a careful eye on, because we have had a lot of production updates from a lot of smaller miners, some in the lithium space, some in the gold space, and it's probably nothing that we can necessarily infer too much for these particular names, but it has moved the markets in recent days, so it's certainly worth keeping an eye on as a potential source of volatility. I'm just trying to see who we might have or what we might have in terms of US earnings coming up this evening, because, well, as we'd be well aware, we're in the thick of things now with Tesla this morning. But just looking tonight, American Express, Taiwan Semiconductor, that's going to be huge actually. So you can put that on your list, folks. Tomorrow morning may be a little less exciting, but American Express, TSM, Taiwan Semiconductor, again.
That's an interesting space.
That's just an interesting space in general.
Yeah,
absolutely. It's a hot one. So we'll watch and wait for that. Okay, let's get across the leaders and laggards, shall we? And, well, Telix Pharmaceuticals, that's 3 days in a row. At the top of the pops.
Again, we're talking about this. Is it the fundamentals? When a stock goes up and up and up, it just makes me nervous. I'm waiting for when are people going to profit take or sell, or are the fundamentals so good that we probably see this upward trend for them moving forward?
Yeah, well, I mean, inevitably there's going to be something of a pullback, right? I mean, people will take profit, the hot money will exit the market. But, I mean, when you look at something so emphatic, and it was a really good set of results, record revenues, really painting a positive picture going forward. I have to say again, Christian Behrenbruch, who's the CEO, is featured on AusBiz before, always paints a really compelling a picture for what Telix is trying to do, and some really wonderful things, not just for obviously its shareholders, but for humanity. The drugs that specialise in really tackling some sort of curly issues, especially when it comes to cancer and things of that nature. But yeah, I think yesterday it was up maybe 3%. On the day of the results was 12%. So I think that's a 20% rise in the space of about 3 days. So again, you'd think it would pull back eventually, but still, that's a strong signal that investors like what they hear from the business in the long term as well.
And even if there is a pullback, if the fundamentals are good, I think if you're long term, you're in it for the long run, then that's all good. Yeah. All right, the laggards today, the materials resources space, and I think we saw that.
Yeah.
Could it be inflationary pressures? Could it be profit taking. I mean, yeah, big movements on that space. I
Yeah.
think there was Alchem had an announcement today, didn't they?
Yeah,
They
we'll
cut
look at
a
that.
near-term lithium price forecast today.
Oh.
It sent shares down, and despite reporting record revenue from one of its facilities, so we saw that going down. Yeah, anything strike you in
Well,
today's
obviously, you
laggards?
just mentioned before in terms of just the gold space, and we did
Yeah.
cover that off the top. But Brainship Holdings is in there as well, which sometimes can be quite interesting to look at. Nothing that I can necessarily see here as being too significant as to why it dropped 4%. Yeah, no news out of the business really. Sometimes these things just happen. So it's a little bit of a drop, a rare spot of volatility perhaps in a fairly, I guess, stable day when it comes to the markets. But let's just get across very quickly to the small caps that were moving. Anything there that we can jump out? My favourite, Jervois Global. Finally, it hasn't been here for
Especially
a
for
week.
you.
And I actually,
Yeah.
I haven't mentioned it on here yet, but I was doing a bit of a dig around, pardon the pun, as to what Jervois actually does. And it's right up my strata, actually. It's a miner, but it's looking to supply cobalt and nickel in a responsibly sourced way. So there you go. I'm not on a page two for Jervois, or I think it might even be Jervois, I don't know. But nevertheless, it's back on the leaderboard doing some interesting things. Actually, Silk Laser is in the news. That's going to be acquired indirectly by Wesfarmers. So that's up 23% today and close to $3
Do you think
per
that's
share.
probably why there was an influence on the price today?
Yeah, without a doubt, 24% up.
Yeah,
Silk Laser
that's significant.
going to be under that big conglomerate that is Wesfarmers that continues to grow. Okay, here are the laggards. Galena Mining. I will try and see if I can find an answer about Galena because, it's only 15 cents, but 33% move. That's almost a third of its value. Anything there? It's raising capital. Okay, so that makes sense as to why that would be down as much as it is. Otherwise, well, there you go. I'll let folks read across the screen the other movers and shakers. But well, Tessa, how did we go? That was a whirlwind. Managed to, again, generate a little bit of excitement in what was a pretty dull day otherwise.
I'm looking forward to tomorrow. I really hope there's some movement, as Henry too is hoping for.
Absolutely.
Do you think there will be?
Well, again, we goes back to that question. Where's the catalyst? Where's the catalyst coming from next? And it's going to be Fed. It's going to be an inflation figure. It's going to be something that shifts monetary policy expectations, or an absolute shocker from US earnings season. None of those things are coming up from the calendar in the next 24 hours.
We're waiting.
We are waiting. So we do get that some of that information next week. Certainly the start of May will be interesting because we get, again, RBA, some economic data, some of those big companies that report that Microsoft's, Apple's and all that. So maybe it could last for another week of this fairly dull trading. But nevertheless, we'll be here standing by
across
if
all
it
of it
happens,
for you.
if it happens to occur.
Or not.
Or not. We'll wait and see. But Tessa, really great to have you on board. We'll be back again in 24 hours' time. And of course, we'll be back tomorrow morning to take you through the world of markets. Make sure you catch up on all the latest news and views on our website and app. In the meantime, have a great evening.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.